Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Friday, December the 13th. Mixed, rather quiet trade here overnight. Corn right now is fractionally lower. Wheat prices are steady to two better. Mixed trade here in the soy complex. Beans are off 5 to 6 cents. Meal is off $2 to $3, while bean oil prices are steady to 10 points better. Narrowing the gap a little bit with palm oil prices, which were slightly lower overnight. Speculative traders yesterday were mostly quiet here in the ag space, with the exception of corn, where they did sell about 11,000 contracts. We had that reducing that long position now down to about 125,000. We'll get a commitment to traders update this afternoon from the CFTC. Export sales yesterday were a bit disappointing, particularly given the fact that the USDA raised estimates for both corn and wheat earlier this week. That said, however, year-to-date commitments continued to run above the pace needed to hit the USDA forecasts in corn, beans, meal, and oil. Wheat exports, they're running 9% above a year ago, where the USDA forecast is for a 20% jump. However, as we look back a year ago, we were seeing some big sales to China, which inflated that figure, which a lot of those sales were ultimately canceled. Drier weather as of late in Argentina has enabled farmers to get a good jump on planting their crops. Yesterday afternoon, the Buenos Aires Grain Exchange report that corn plantings advanced to 56% complete. That's well above the 32% from a year ago and the average of 40%. Bean plantings are now 65% complete, advancing 11% on the week, while wheat harvest surged 16% to 64% complete. Not much change yesterday on the South American production estimates. However, it certainly would tilt a little bit higher here, given the favorable weather to date and in the extended weather outlooks. Overnight, the Chinese Stats Bureau, they did report their 2024 grain production would reach a record this year at 706.5 million metric tons. That was up 1.6% from last year's record. Their corn estimate at 295 million metric tons, just above the USDA estimate at 292. Their wheat forecast is 140 million metric tons, that pretty much in step with the USDA. March corn did fail to trade or close above the 450 level here earlier this week, and is still sitting with modest gains for the week, despite the little bit of a pullback yesterday. I do think we'll make another push towards the upside. I do hold a 470 upside target on strong export demand, as we do remain competitively priced in the global marketplace, while we continue to see strong demand for ethanol production. Jan beans continues to hover just below that $10 level. We do have moving average resistance at 10.1.5. Still feel the path of least resistance is to the downside, as the probabilities of record yields in South America grow. Also, the market just seems a little bit disappointed in the lack of clarity with further stimulus measures here by China. I still hold a 935 downside objective here for spot beans in early 2025. Meal continues to hover just above their contract lows. I would look for a retest of the 280 level, the lows from 2020. Spreads did make a new low here yesterday. Bean oil did find some good support overnight at the 100-day moving average at 42.31. Resistance is at the 50-day moving average at 43.65. After nearly doubling their export forecast earlier this week to 1.1 billion pounds, yesterday's export sales report did show we've nearly reached that level already, with still 9 months left in the marketing year. Look for oil to continue to outperform meal moving forward here, sitting at just over 42% of product value. And wheat price continues to see a little bit of a rebound here. We are awaiting results from the Saudi Arabian tender here. I do have a slight upward bias here on speculative short covering into year-end. 580 for Kansas City and Chicago wheat, 625 for Minneapolis. Thanks for listening, everyone. Have a great Friday and a great weekend.